the market on close. Some Oliver Rennick Tesla shares have been moving pretty strong over the last couple of weeks. Expectations getting built in for the robo unveil next month. Ross Gerber joins us, President and CEO at Gerber Kawasaki Wealth and Investment Management. Ross, are you gaining any more confidence in Musk and team?
From what? What would gain me any confidence?
Yeah, shares are doing all right.
The shares are wonderful, I guess, but remember, there's the stock market and there's the business, and oftentimes there's a difference between business performance and the stock performance. So, obviously we're happy to see the shares get back to even for the year and make back some of the money we've lost on Tesla this year. But the sad truth is Tesla hasn't gone up for 3 years now. So that's where we're at with Tesla. As much as I'm excited for $250, I'd be a lot more excited for $400. Sure.
You got to start somewhere.
The all-time high, actually.
Well, that's kind of what I'm wondering, Ross, is like, because your thesis about how we got into this mess, kind of mismanagement to a degree, distractions with other things, then falling short of expectations on the robo stuff, kind of giving into that kind of hype that Elon kind of let us down on last time. So I get that. But if then he does manage to pull off some amazing trick and we've got these machines rolling around our cities in 6 months, I mean, is that possible? Because I would think that would be huge for the stock.
Oliver, today in Los Angeles, there are Waymos everywhere. The entire city is covered with Waymos. Half my staff is taking Waymo now.
Really?
And,
Wow.
It's incredible.
But that's the epicenter.
They're all over. Robotaxi's already here. Okay. I want to be. Most cities don't have this, so you just don't know. The entire city of LA is now the market for Waymo. You can go anywhere in LA. There are Waymos everywhere. They're charging for rides. They're picking up rides. It's incredible. They're driving by my kids' school with all the kids out in the street, right at school, after school. These things are driving perfectly well. I haven't heard any incidences. We have team members taking Waymo now every week. Everybody's raving about the experience. So as much as I want to get excited about Tesla, the truth is they're late to the game, and Waymo's already here and it's working and they're wonderful vehicles and everybody likes them. And with a partnership with Uber, this is a really, really tough hill to climb for Tesla. And they don't even have a vehicle that works yet.
Okay, point taken. I guess then the devil's advocate for the bull side would be the success of it in some of the California cities suggests that it could be replicable and could be big for
100%.
scale.
100%. If you can do this in LA, this is the worst city to ever drive. It is a nightmare out there every day. It is a war on the freeways every day. And if you can get Waymos to work in this city, you can do it and scale this globally. So I am really bullish on Waymo. And I used to hate Waymo. Okay. So, if my Cybertruck actually had full self-driving, I might be more bullish on Tesla. But what I think is by the time Tesla gets there, this market's already taken by Google.
Okay. Ross, is there anything next month, just real fast, last point on this, that would make you feel better? Is there, at this juncture, anything that could...
Yeah, I'd like to see delivery numbers be decent. What Tesla makes their money doing is selling vehicles. And you got one market doing well here in China, but they got two weaker markets here in Europe and the United States. So, I don't know what these numbers are going to be, but I'd love to see the numbers not be bad, So if we don't destroy margins through earnings and we have decent delivery numbers, then the stock can move higher on the robotaxi hope, But if we don't get these numbers, we're still on the same morass we've been in for years, So, I would say cautiously optimistic, and that would be generous.
Okay. All right. Like it. 1 year high, close. So we'll revisit.
But it's hard to justify the valuation up here. It's really hard, with $3.20 in earnings estimates for next year, and Nvidia trading at half the multiple. It just seems hard to justify the multiple.
That part definitely rings true to me. If you really want to get growth risk or take beta, there's cheaper ways to do it with more proven trends in place. So with that said, then where do you skew? What's your favorite tech growth play right now, Ross?
Well, I'm actually, it's interesting. Tech is sort of like taking a little bit of a breather, and we're looking at some of the other 493 stocks that I think will do really, really well. And we've added a lot to our position, like in Home Depot, for example. That's been really good. I just added General Dynamics to my fund, GK. I like it. And military, industrial, nice dividend, tons of demand for its products, unfortunately. And then Stryker, which is a healthcare company. We're really bullish on healthcare. I can't tell you the aging population and the demand for healthcare. And Stryker, they do all your knees and your hip replacements and shoulder replacements. And thanks to things like pickleball, they're making a fortune. So, we're looking at other areas of the market. So as much as I'm bullish on tech with our three core holdings, NVIDIA, Microsoft, and Apple, I'm much more bullish on other areas of the market right now.
All right. The 497, 493 rather. Okay, well, I guess it depends if you count the double
493,
shares. Yeah, it depends if you count the double shares. All right, love it. So it seems like you want to find ways those still connect into like secular growth themes, just sector-wise, a little bit more diversified options now.
Right. So look at it this way. When interest rates are high, big cap tech really has an advantage because they don't need like loans, So small and mid caps have underperformed substantially because, small businesses borrow. So now we've got a lower and lower interest rate environment, and the Fed, in our mind, is going to be lowering rates for some time, to get back to what makes sense. And this is really bullish for small and medium-sized corporations, real estate, a lot of sectors that have lagged. So, even I like kind of stocks like Walmart and other things too. So there's lots of areas that we can look in that we're not invested in. How about utilities like NextEra Energy? So we're looking in all these areas to diversify our portfolio a little bit more for what does well when interest rates go down and what's interest rate sensitive, like small and mid caps, where we can find opportunities.
All right. I like the pickleball play. Is that as big on the West Coast as it is in New York?
Yeah, it is. It is. I'm a tennis player, so I'm not a pickleball fan.
Right.
But it's causing lots of injuries among the older folks and lots of usage of their hips, knees, and shoulders. So
that's my game.
So yeah,
Stock
look,
picking everything,
great. Activity's great when you're older, and you can go get your hips done with Stryker and be back on the court in 3 months. I don't know.
All right, nice. I like it. SYK. I kind of same way. Played pickleball once, and I was like, I want to go play tennis.
Yeah, I like tennis. Tennis is fun.
Appreciate the chat. Thank you, Ross Gerber.
Take care.